This is Fintech Insider News. This week, we are talking about Monzo unveils 3 new controls to protect its customers from fraud. Revolut posts some huge results as IPO rumours swirl. And Robinhood and Nubank have both bought artificial intelligence companies. We discuss all of this and much more on today's show.
Entrando em contato com atendimento ao cliente. Para muitas pessoas é um jeito fácil de arruinar um bom dia. Mas na Zendesk, nós deixamos a experiência do cliente melhor. Melhor para sua avó, melhor para o seu vendedor preferido de flores, melhor para o cara do apartamento 3A, melhor para você, melhor para todos. Porque enquanto alguns dizem que o cliente sempre tem razão, nós dizemos que o cliente é sempre humano. E, como seres humanos, queremos fazer algo melhor para todos nós. Zendesk, experiência do cliente com IA desenvolvida para humanos.
Hello and welcome to episode 875 of Fintech Insider. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. I'm joined this week on Fintech Insider News by 3 guests who are here to break down the biggest stories from the past week in fintech and financial services. Firstly, I want to welcome my fellow 11 and my co-host for today, Nadine Timmer-Bodenstein, Ventures Product Lead at 11FS. It's always fun to record the show together, Nadine. Can you tell our listeners a little bit about what you've been working on recently?
Thanks, Benjamin, and it's great to be back. It's been a few weeks since I've actually done a podcast, and that's because I've been on a client project. So yeah, it's been really interesting. I've been working with a client on a new strategy for their mobile app, a bit of a refresh to ensure they are delivering maximum value to customers. So that's been great. But yeah, very happy to be back on the podcast today.
Super exciting. I always enjoy those types of projects. I'm a little bit envious that I wasn't on that one. And please also welcome to the podcast, making their Fintech Insider debut, Mike Bray, Chief Information Security Officer at Monzo. Welcome to the show, Mike. We assume that most of our listeners have heard of Monzo, but perhaps you can let them know a little bit more about you and what you do there.
Yeah, thank you. It's great to be here and chat to you all. So I am the Chief Information Security, or CISO, at Monzo, which, just in case some of your listeners don't know, we are the UK's largest digital bank, with more than 9 million personal customers and 450,000 business customers. I've been at Monzo nearly 4 years. I joined in October 20 during kind of full lockdown. And prior to that, I was a CISO at Bupa in the UK. And overall, I've spent 25 years this year actually working in security, covering kind of a variety of roles from sort of deep technical in my early days to the CISO role that I'm in today. And I've got a really fantastic role here because I get to lead our security efforts across infrastructure, product, everything that our customers see. So I get the opportunity to work with loads of great teams, and I see that direct impact on customer outcomes as we build this app that customers are turning to manage everything in their financial lives. That's it. That's me.
Fantastic. Well, welcome. And security, of course, is so important, but it's one of those things that sort of people take a little bit for granted until it's not there, at which point suddenly it's we all suddenly realize, oh, wow. And I'm also delighted to welcome back Chris Skinner, best-selling author and CEO of The Finanser. Chris, your new book, Intelligent Money, is about to hit the shelves. Would you tell our listeners a little bit more about it and about you for people in fintech who haven't come across you yet?
Thanks, Benjamin, and hello, Nadine and Mike. I can bore you for ages with all about me, but I'll try and avoid that. If you haven't heard of me, then where have you been? I'm the guy who's the financer. I'm the guy who's the godfather of fintech, in my own humble opinion. And my 18th book is just hitting the shelves, and it's all about how if you democratize and decentralize money and then add artificial intelligence, what's the result? Read the book to find out.
We shall. All right, let's jump into the news. So our first story this week is that Monzo has introduced a trio of new fraud controls. So the UK Digital Bank has announced 3 new features: known locations, trusted contacts, and secret QR codes, which are coming to customers in the coming weeks. So how they work: known locations enables customers to choose specific locations, such as their home or their work, where they must be to make transactions over a certain limit. If they are outside these locations, the transaction won't go through. Trusted Contacts is where customers can invite a trusted Monzo customer to review transactions over their set limit to ensure they look safe before proceeding. And secret QR codes can be stored on a separate device and must be used alongside the customer's phone to approve high-limit transactions. These new controls are designed to help customers reduce the risk of fraudulent payments due to phone theft, shoulder surfing, or impersonation scams. They come after Monzo's call status tool, which has already helped report over 4,000 fraud attempts this year by allowing customers to verify if they are genuinely speaking with Monzo. So we've got someone on the podcast who worked on this. So Mike, we're going to come to you first, obviously, if you don't mind. Congratulations on these new features. What can you tell our listeners about them?
Yeah, thanks very much. Look, we're really proud of these features. And before I talk about any of the specifics, I think it's really important just to take a step back and explain why we're developing these kind of industry-first products. Our priority has really always been about preventing fraud before it happens, and that's really important because it's such a thing's rising all of the time at the moment. And that was the purpose of the call status tool that you just mentioned that we released last year to help us tackle that impersonation fraud type case. And these new features are part of this whole journey that we're going on about trying to tackle that fraud issue, and we're really excited about them. We've already had some really great feedback from customers on using some of these features. And they give customers the opportunity to really increase the security around their money in a way that suits them and gives them the confidence that if something does happen, i.e. they lose their phone or it gets stolen, which is obviously increasing all of the time. It's something we read about and see in the media constantly, that their money is that extra bit safe. And there's loads more to come from us in the future on these types of controls. And they kind of leverage this banking technology and engineering expertise to stop fraudsters and criminals and give customers that peace of mind to make those transfers. And the fact that we kind of own our whole sort of data infrastructure and code stack means that we can really kind of work with our customers and move fast to try and solve some of these problems and really get products like this out to customers quickly. So it's been a great opportunity to get these controls out, see some of the feedback, and like I say, lots more to come.
Can you tell us a little bit about sort of how you involve customers in that process? Because fraudsters are always looking for the weak point in the chain, and often that can be customers. It's not always customers, but often it can be customers. How do you sort of involve customers in this? How did you make sure that you were developing things that were going to be useful to and used by customers?
Yeah, sure. So we've got 9 million customers and counting, and we work really, really hard to kind of keep that dialogue flowing across what really is quite a mind-blowing number of touch points with our customers, which is fairly unique. And we do this at a scale that a lot of companies struggle to imagine, really. And it's through our socials, our community forums, a lot of the feedback that we get in the app. Once the feature is launched, we get a real feedback loop from our customers. For every single product we launch, we might get maybe 500 bits of feedback every month. And coupled with everything else you see, that gives us a real phenomenal amount of data points that we can really use to inform and deliver some of these products. We've heard a lot from our customers that there's a growing level of anxiety. Phone thefts are on the rise. As I said before, you see this all the time. You read about it all the time in the media. And we built these features to kind of alleviate the stress for our customers and take away the worry about their money getting stolen. If you get your phone stolen or something of that nature happens, it's immediately a worry for you as a customer. And it's worry enough in that situation without having to then worry about, is my money going to go at the same time? There's always this kind of scramble. I've got to get a new phone, or I'm really worried about the things that people can do. And we're just trying to take away that element of the money worry on top of everything else. And we always keep our ear to the ground with our customers. Nothing really sort of comes to a surprise because we're constantly talking to them. So we're developing these features off the back of their feedback.
Am I right in thinking, Mike, that some of these developments were actually customer ideas, or is it something that was internal?
So this was internal. Some of the things we develop do come from customer ideas. We have a blog, we have feedback. Lots of people do feedback features to us. So some of them do come from customer ideas. The call status tool we launched last year came from a hackathon that we did internally in the organization, and it came up with this idea. So there's lots of ways we do come up with new ideas. Some are from customers. This one came out of our security team.
If I can jump in, I mean, as I was reading the article and preparing for this podcast, I did a little bit of side research on the actual, fraud and theft statistics. And I was really shocked to actually read that last year in London, 70% of all thefts were mobile phone theft. So, I mean, Mike, you touched on it. It's a growing problem. I don't think it's going away. And of course, like you mentioned, the focus has to be on protecting customers before such an event happens. But in the event that it does happen, I think these features that you've introduced are really fantastic to give that peace of mind. And I think for me, as a Monzo customer, the one that really stood out was the known location, because as I was reading it, I was thinking, you have created a feature that already mimics the behavior that I exhibit as a customer. Because then I was reflecting on, large transactions that I've made in the last month. And I thought, yep, I've only ever made that transaction from my home or from work, because those are places that I associate as being safe places and places where I can actually sit down and make sure I've got the right details and I'm doing the right things. And so it was actually interesting to hear, on the back of Chris's question, that these weren't necessarily ideas from the community, because they really do feel like ideas from a community, given how much they resonate with customer behavior. So I think it's really, really interesting, and really excited to hear the customer feedback when they do launch.
Yeah, and I think even if the idea hasn't specifically come from the community, we're so in contact with the community that these are the things that stimulate our ideas, because we understand the customer problem so much. And completely agree with everything you just said, relocation, because I think about if I'm going to make a high value transaction, I'm likely to do that sat at home with the information that I need, or whatever that looks like. I'm not likely to be doing that walking around the UK or doing it somewhere else. So it just makes logical sense that would be a good control to put in place.
From my side, I like the known locations and shutter contacts, but I was particularly interested in the secret QR codes, because it assumes you've got multiple devices, and most people have, a laptop or and a phone. So, do you think QR codes will take off in other ways in Monzo? I mean, are you using them for making payments and other stuff now?
There's lots of ways you can use them. I think that developing a capability to use QR codes for certain things is something that everything we do here, we develop in a way that it's extensible. We can use it for multi-purpose. So absolutely, there's more ways that we can use QR codes. And I think you can obviously print that out, store it as well if you need to at home in a secret location. You don't need it necessarily digitally on a device. But yeah, absolutely. I think the use of QR codes can be leveraged in lots of ways.
It will be interesting to see how many customers do actually print out the QR code, because I know when I set up my Google account through work, and they kind of said, here are your backup codes, make sure you write them down and you store them in a safe place. And if you get locked out, you're going to need them. And what happened? I wrote them down. I stored them in such a secure place. I forgot where it was. I got locked out of my Google account, and I had to engage with someone to unlock it. So yeah, that's my only skepticism around the QR codes. But like you said, I think they work well if someone can store it on another digital device, because then there's a higher chance you're not going to misplace that.
Well, the good thing is, you have to have two methods available. So if you do lose your QR code, you've got that backup method of the other one you've selected. So,
Mike, this is going to sound like a little bit of an unfair question, but sometimes there's a sort of tension within security organizations, because there are things that you do to keep customers safer and things that you do to make customers feel safer. Do you have a sense yet, and I realize you haven't launched these controls yet, do you have a sense whether these are perhaps more sort of about psychologically making your customers feel safer and making them, feel, happier about banking with Monzo and know that you've got their backs? Or do you think this is really, that some of these features might actually really help drive down the sort of fraud that customers are subject to? Because I sort of wonder, is it maybe the more security conscious customers are the ones who will adopt them, and actually it's some of the other customers who are maybe more at risk?
Yeah, look, I think it's definitely a combination of both. Look, it absolutely will drive down fraud. We're seeing it with call status. We will see it with this, because you see the rise of phone theft and all of these things going on. It will undoubtedly have an impact. I think the element of customer trust is really important, particularly when you're a digital bank, where you have a perception of sort of carrying around all of your money in your pocket in the digital world. I think that level of trust is something that we want every customer to have in us as a bank. So it's really important to keep building on these features and giving the customers the level of trust that they want to be increasingly confident that they can keep their money with us and do all of the things that they would normally do with a bank. So I think it's a balance of both, but primarily hoping that it really has an impact on those fraud numbers.
I think it's interesting as well from my side because I've just had a big Barney with my bank. Well, I've got many banks, but one of the big old banks.
Not us, hopefully, not us.
Well, one of the big old banks, I did a major transaction in my business account, and they blocked my account because it was a new payment to a new supplier, which they didn't recognize. So suddenly I couldn't access my app. I had to telephone them, took 35 minutes to sort it out, which I thought was completely ridiculous. And there needs to be better ways for customers to say, this is a trusted transaction, and not have to call somebody and wait 35 minutes, which is ridiculous.
Indeed. Okay, well, we're going to wrap up on this story. Thank you so much, Mike. Congratulations to you and your team. This is really super exciting, and I'm personally looking forward to seeing these launch. So we're going to move from one digital bank in the UK to another digital bank in the UK for our next story, which is that Revolut has reported record profits as it hints at plans for an initial public offering. This was reported in The Guardian and various other places. So according to its latest annual report, Revolut has reported a £438 million profit in 2023, compared with a £25 million loss in the previous year, driven by higher interest rates and substantial customer growth. Despite this financial success, Revolut is still waiting for approval of its UK banking licence, which has been pending for more than 3 years. The company has added 12 million customers in the past year in different countries around the world, with revenues soaring by 95% to £1.8 billion. Revolut hinted at plans for a future stock market flotation, noting enhancements to its financial controls and processes to meet the standards expected of listed companies. The fintech has faced challenges in securing a banking license in the UK due to past accounting and reputational issues, but has focused on improving its processes to meet regulatory expectations. Revolut does have a banking license in Estonia, which passports into various other European countries. So it is a bank in some countries and not in others. Chris, you have written extensively about Revolut, so if you don't mind, perhaps I'll come to you first. What's your reaction to these results?
I mean, they are quite astounding results because that makes Revolut more profitable than Starling and N26 and Monzo combined. And certainly the customer numbers are more than Starling, Monzo and N26 combined. It would be the highest profitability of all of the challengers, so to speak, and I guess that reflects the fact that they have a good diversity of product range and geography. A third of their customers are UK, but a fifth of them are in Western Europe, almost a fifth in Eastern Europe, and then 14% in Northern Europe. So a very good spread across all of Europe. The customer numbers and the results I thought were a bit surprising, though, because they filed their results really late last year, which is part of the reason why they've had a problem getting their banking license in the UK. And you kind of wonder what's under the hood a little bit more. And we haven't seen the annual report, and I haven't looked in depth at the numbers under the hood. But you kind of do wonder, how could you have a company that's doubled its customers and profits, lurching from a loss last year to a £438 million pound profit the next year? What's driving that? And I guess from what I see, a lot of it is to do with the spread of word of mouth around Revolut's customer experience. And I've seen they've been hiring a lot of customer service agents in the background. So a lot more focus on customer experience, user experience, customer service. Maybe that is driving the numbers, but it seems a little bit strange to me to see such a turnaround in 1 year when they filed the accounts late the last year.
Yeah, I can jump in because I was also quite astounded by the change in numbers. So I did some Googling and tried to get a bit more of an understanding, like you said, Chris, of what is driving this. And so I'll just share, I wrote some notes on what I found in various news articles. So apparently their net interest income rose from £83 million to £500 million in 2023. And like Benjamin said, when he kind of introduced this story, they've already indicated that that was driven by the kind of higher interest rate environment. In a separate article, I read that they saw significant growth across 3 core revenue streams. So their subscriptions increased by 53%, their Forex and wealth services rose by 46%, and their cards and interchange revenue climbed by 59%. I haven't actually done the maths and tried to figure out if it all adds up to what they're claiming, but it is pretty fascinating. And like you touched on as well, I think one of the really interesting things about Revolut is their marketing strategy. I mean, you touched on the kind of customer service agents, the word of mouth. I mean, up until 2018, I think most of Revolut's growth was just down to, word of mouth. They didn't have any paid advertising up until that point. And so we know that they do focus like deliberately on this kind of organic marketing strategy focused on community building. How do they actually create advocates within their customer base who are then going to convince their friends and colleagues, etc., to join? They do engage quite regularly with influencers as well on social media platforms. They're very deliberate about adopting a tone of voice that is very separate to how banks speak, more provocative, more direct, more no nonsense. They also use media that the younger consumers relate to, whether that's memes or whatever. And I also remember actually seeing that when I was trying to understand the kind of customer base in more detail, that more than half of their customers are within that Gen Z millennial bracket, so between the ages of 18 and 34. So I think when you then add up all of those, and then of course the referral program, that is an incentivized program for customers to refer friends and be paid if their friends do join. When you start to look at all those details, perhaps it does seem slightly more possible, given that they do have quite deliberate strategies in that regard.
Yeah, and I find it interesting that when you're gaming, the in-app advertising by Revolut has increased significantly in the last year, and also they did a London Underground poster advertising campaign. So as you say, their media investment has risen significantly in the last 18 months, 24 months. But the banking license in the UK is a big issue for them, because having a third of the customers in the UK and you can't lend to them, and you only have an EMI license, an electronic money license, which has to be safeguarded, means that they've got an awful lot on their balance sheet that's not working for them and giving results. Mike, I mean, obviously it's difficult for you to comment because I guess they're competition, but what's your sort of view of why Revolut is rocking and rolling?
I think for a lot of the reasons that you talked about, Nadine, I think that closeness with the customers and in touch, and that I was going to say when we're talking about the security features earlier, the traditional ways that you communicate and educate and kind of make customers aware are not really working they're not very impactful across the industry. And we've got to think about how we better engage with our customers and through those social channels, and the way that people consume information these days is very, very different. And to be able to tap into that is really a superpower. And I think that's something that we do a lot of as well, is that we try and really think about how does this resonate with our customers? How do we tap into those channels that they can consume information better and consume those types of things in the way that they want to consume it, rather than the way that we want to show it to them or the way that we want to provide it to our customers. So I think just being really linked in with customers is really important. So you can tap into some of those nuances about how you make things resonate with them.
It's interesting that the concept of expanding in the States is seen as harder than expanding across European countries. I mean, in a sense, that's an endorsement of the European Union, that it has actually managed to bring such diverse countries together. But it is interesting, because you're quite right that the American banking market is tough to enter because of the state-based licensing. One of the things I was going to touch on was just this sort of switch to profit that Revolut has achieved. I mean, we do actually see other digital banks doing that because economies of scale start to kick in, right? You have a lot of fixed costs, and I'm sure, Mike, you recognize this at Monzo. You have a number of fixed costs. You have employees, you have offices, you have lots of regulatory compliance and so on. But as you get scale, suddenly the revenues you're generating do start to get to the point where they do outgrow the costs. And then in particular, if you reduce some of the spending, right? And what we've seen many digital banks do is spend a lot of money developing products on marketing and so on. If you slow that spending down, you can actually switch from loss to profit. Obviously, it's hard to do, but we certainly have seen other digital banks doing that. I think what's really interesting about Revolut, and Nadine, you were sort of touching on this a bit, is that they've managed to get to profit while still growing rapidly. I mean, acquiring 12 million customers across different countries. I mean, they're now in 38 countries, which is an impressive feat in itself. But that they've got to profit while still growing is really interesting. Nadine or maybe Chris, I think what's interesting is where is Revolut growing, right? Because we know they're hugely well penetrated in countries like Ireland and the UK. Is this growth coming from New Zealand? I mean, it can't be. There aren't 12 million New Zealanders, right? Well, Nadine, where do you think Revolut might be winning some of those new customers?
Yeah, I was also, I was on Statista earlier because they actually have a really useful graph showing, Revolut's market share across different countries. And as you touched on, and I think Chris mentioned it earlier as well, the UK is their largest market. The stat was between March 2015 and Jan 2024, there have been 12.5 million app downloads in the UK. And I think that a lot of the growth is still actually coming from within the UK when you look at the number of new customers signing up to the app. And I think that's down to some of the points I touched on earlier around the success of the referral program and their community-focused marketing efforts. In terms of outside of the UK, I'm actually not so sure where the largest growth would be coming. Chris, I'm not sure if you have any insights on kind of, countries within the rest of the world that are contributing to Revolut's growth.
At the moment, it's all pan-European, most of it being in Western Europe. So Germany, France, Spain, but there is quite significant growth in Eastern Europe as well. And as I'm based in Poland, I can see particularly for FX and cross-border payments, a lot of people are finding it useful. I actually use Wise most of the time myself for foreign exchange payments, but I think Revolut is quite a snazzy competitor with Wise, which is where they're coming from.
I think that's right. I think it's very, very popular among younger Europeans, particularly more mobile European people who are moving across different countries. And as you say, it's very well known.
Yeah, and you've got to bear in mind, I mean, Wise does provide accounts with IBANs. So I would see that Wise and Revolut being the two big players in sort of mainland Europe that I'm watching.
Okay, well, on that note, we're just going to take a quick pause here and we will be back very shortly. Welcome back. Now, if you were on this podcast, what would you want to talk about? Well, here's your chance to tell us. Join David Bray and some of your other favourite Fintech Insider hosts for a no-holds-barred chat about all things fintech at our next Fintech Insider Open Mic Night. It's taking place in London on Thursday, the 25th of July, and tickets are free and available right now. Just head to the link in the show notes to sign up, or head to our social channels where you can find out more information. And if you can't make Open Mic Night, please do keep sending in your questions to us at podcasts@11fs.com. So back to the news. Plaid, which was once mostly aimed at fintechs, is now growing its enterprise business and has more than 1,000 enterprise customers signed on. This was reported by TechCrunch. So Plaid has expanded its fintech services beyond connecting consumer bank accounts to include lending, identity verification, credit reporting, anti-fraud, and payments, growing its customer base substantially. The company was nearly acquired by Visa for $5 billion US dollars a couple of years back. But after the deal was blocked by antitrust regulators, Plaid raised funds at a $13 billion valuation and diversified its revenue streams. Plaid's customer base now includes not only fintechs like Venmo and SoFi, but also large enterprises like H&R Block, Western Union, and Citi, with over 1,000 enterprise customers added last year. The fastest growing segments for Plaid include identity, payments, and credit products, with more than 50% of its identity product customers being non-fintech clients. Plaid has also launched Layer, which is a new onboarding product aimed at simplifying the user experience, which could significantly improve conversion rates for its clients. Nadine, let's maybe come to you first. So it's a bit of a success story here of Plaid diversifying and so on. What are some of the advantages and disadvantages of trying to diversify in this way?
Yeah, of course. I think the most obvious, biggest advantage is serving a wider customer base, by introducing new financial products and services to diversify their revenue streams. Like they stated, they have now been able to tap into customer segments which previously they weren't serving. When Plaid started, they were mainly selling to other fintechs. Then they started actually selling to banks and other financial institutions. And now with the introduction of these new products, we can see how their customer base also includes larger companies in general who are wanting to embed certain solutions into their offerings. I mean, Benjamin, you obviously touched on who some of those companies are. So I think from that perspective, this strategy is paying off at Plaid by introducing new products, diversifying revenue. They've been able to tap into a new customer segment. And actually, I think I read that their enterprise and traditional financial institutions growth is actually starting to outpace the rest of their business. So it has been very successful for them. I suppose on the flip side, what are some of the disadvantages? We speak about it often, which is trying to serve everyone with everything is not always going to be the best strategy, because you can lose sight actually of, what is your core vision and mission as a business, and how are you continuing to deliver against it. So I think that's always something that is a balancing act, balancing introducing new products to serve new customer bases, to create more diversified revenue, with staying true to your original mission as a business and not actually trying to do too much and then not really delivering value against any of it.
Chris, is this enterprise success, fintech being embedded into everything? Is Plaid just sort of riding the wave of embedded finance?
Absolutely. I mean, it's really interesting because they've doubled down on their focus on identification, verification, authentication. And the launch of Layer last month is a really interesting development, because the quote that came from the CEO is, when we're going to buy things, we generally go to Amazon because we're confident and secure in the payment experience, which is quick, fast, and easy. And they want to make that as quick, fast, and easy for all of their enterprise customers, which is, that's an admirable objective. And I can see that the enterprise business, if they can do that and achieve that, will be massive. Obviously, there are other players out there. I'm thinking of Adyen and Stripe and more, who could easily move into the same space. But Plaid, which actually, I in my head for some reason I think of it as Plaid. I don't know why. Don't play me. But it's a business that's obviously doing the right moves, particularly when you look at the valuation, which, as you mentioned, has almost tripled since Visa made a move on them. So they seem to be doing good things.
I think it's American pronunciation versus British pronunciation, but I've worked for Americans for so long that my wife occasionally criticizes me for saying a word in an American way.
My children go to the American school and they started saying Z, and I keep saying it's not Z, it's Z. Z. You've got to say it properly.
Mike, when I sort of step back and think about some of the things that companies like Plaid are doing, and it's amazing what they're doing, and the way they're enabling people to access their data and develop new services is amazing. But there's a little bit of me that just gets the heebie-jeebies about the security of all of this. Data sharing is fantastic. It enables new things, but does it create ever bigger risks? And can those risks sort of be mitigated? And I realize that's $1 million question, a multi-million-dollar question. But do you look at things like this and think, ooh, there's some security risks in this? Or do you look at it and say, okay, this can be managed?
Yeah, I mean, I look at everything and say there's security risks in this. Just as an aside, my kids watch YouTube all the time, and they speak American constantly, just like you're saying, Chris. So yeah, look, I mean, I don't think it's a bigger risk than anything else we've had to deal with going forward. I think that it brings risks, of course, and it's something that we look at all of the time, and companies will have to look at both security, data protection, all of these different types of areas. It's just something else that we have to consider. I don't think it's something that you would look at and say, we can't mitigate this or do something about it. Anything can be balanced in terms of levels of risk. I think if you want to mitigate it fully, just don't do it or turn it off. And that's a great way to mitigate it fully. But I think obviously depending on your organization and where your kind of levels of risk tolerance are, you set them appropriately and think about what you're prepared to do as an organization. But it's not a new problem to solve. It's just another thing to look at and make sure that you are kind of managing that risk appropriately within your organization. I don't really see it as a bigger problem, just another problem.
Yeah, I guess again, because you'll know better than me, Mike, but if you look at the way we talk about platforms and ecosystems and trusted third parties and open banking, the more players that you bring into the game, I guess the more exposures you have. How do you deal with that?
I mean, it's hard to deal with, particularly with third parties and fourth parties and various other people that you deal with. I mean, honestly, the way that people seek assurance across the industry, across the people that they deal with, has been lacking a bit, I think, in the past. And there's more we can do in that space. There's better ways of looking at getting that assurance of the partners you're working with and trying to get some more security around some of those relationships, some of those data sharing agreements, the way that we share data technically and the security around those. And it's a problem because I think ultimately you are reliant on somebody else, and you are reliant on them not only implementing security controls in their organization, but following those controls, following those processes, and how do you see kind of constant ongoing assurance of that is a real challenge for the security industry. And actually it's something that you can never really do because you're just not in control of that fully. So it's a difficult thing to do. I think there's a lot more we can do as security practitioners to really think about, is there a better way to do this? Is there a better way to focus on the things that we really care about, i.e. the services we're taking, the points where data is being shared, the kind of interconnectivity, rather than just thinking about the traditional things, which are maybe, does this company have the right policies? Does it have the right standards in place and those types of things, which really actually, when it comes to it, don't give you a lot of assurance. But it's a difficult problem to solve.
I'm sorry to keep butting in, but one of the big stories for me this week, which is not on our list, but was the Evolve Bank and Trust Wise and their partners issues with a data breach. And I think that gets into really sticky waters, which, to manage that exposure is really difficult.
Yeah, for sure. And look, there's so much interconnectivity, and I think that is the challenge for us is where does that data flow? And it's the same for everybody. It's where does that data flow? How does it flow? And how many parties does it flow through? And who has control of all of those different points of connectivity is really hard to keep control over.
So we're going to move from one super challenging topic, though in passing, congratulations to everyone at Plaid for the fantastic increase in valuation and the great work they've been doing. But we're going to move from one really tricky topic to another really gnarly topic of artificial intelligence, which is rarely far away from the headlines, certainly this year. And we've had two fintechs make big acquisitions this week that caught our attention. So Nubank from Brazil has acquired AI for banks startup Hyperplane, and Robinhood has snapped up Pluto to add AI tools to its investing app. Both of these were reported in TechCrunch. So Brazilian digital bank Nubank has purchased San Francisco-based data intelligence startup Hyperplane just 7 months after Hyperplane announced a $6 million seed round. Hyperplane allows banks to train their own models to power tools across risk, collections, and marketing. Commenting on the deal, Nubank said this continues its mission to give customers truly customized financial advice. Meanwhile, investing provider brokerage Robinhood has snapped up an AI-powered research firm called Pluto. The integration will help Robinhood customers benefit from quicker identification of trends, helping them make faster investment decisions. As part of the deal, Pluto's founder, Jacob Sansbury, will join Robinhood, tasked with accelerating the trading firm's adoption of AI. Chris, I think I'm gonna come to you first, given your book. What do you make of these two deals? Are we going to see a lot more of this kind of thing?
I mean, AI is nothing new. It's just that it became the hot topic because of OpenAI, ChatGPT, and the Microsoft purchase and the launch of Google Gemini and everything else that's gone on in the last 12 months, 18 months. And I say it's not new because I was dealing with AI related things, before Nadine was born, I imagine. And so it's kind of like something that I've been working with for a long time. What's interesting is that for the last decade, there was a lot of headlines actually about banks using AI techniques and systems for fraud and risk monitoring. And the nearest they've got to using it for customer experience is chatbots, which is really basic and simple. And what I think is going to be happening is we're going to see a lot more layering of depth in customer transactional analysis and experience. So, a decade ago, we talked about personal financial management. I think we're moving to an age where I can actually see who I paid, when I paid, where I paid, everything about that, things that I'm doing in visualization tools that are far more advanced through AI than we've ever seen before, which is exciting. Although it did amuse me because I posted a joke on LinkedIn yesterday, which was replace everything in our pitch deck that says crypto with AI. And it got over 6,000 views in like an hour. Something else.
Yeah, it's definitely the flavor of the year. Nadine, apart from the fact our listeners now know that you are blessed with youthful looks, what about Robinhood? Do we think investors who use Robinhood as their platform are going to be ready to trust AI to give them advice on their investments? Is that a good thing? Robinhood's not being completely free of controversy when it comes to how it uses things like sort of game mechanics and so on in providing investment opportunities to its customers. Is using AI a good thing here?
I think it is. I think, in my opinion, the kind of investment industry is one that is most ripe for AI, given some of the points that Chris made. And like Chris also said, AI has been around for a while. Many robo-advisors already rely heavily on AI to power their platforms, to kind of give those personalized recommendations, etc. So I think it's only natural that it would begin to, filter down to the likes of Robinhood, which obviously is not a robo-advisor, but they have already stated that one of the main reasons they did this deal with Pluto is because they want to be able to give their customers like quicker identification of trends and investment opportunities. They want to be able to better help users with their investment strategies and kind of guide them into the right decisions, as well as offering that, real-time portfolio optimization. So I think we see this with the clients that I work with. I do a lot of customer research, specifically in the kind of investment wealth management landscape. And without doubt, in every single interview I'm part of, people want tailored recommendations. They want to be able to access what have previously only been services reserved for high net worth individuals, but they want to be able to access that through their apps at obviously a much more affordable price point. So I think that for me is where AI does bring a lot of value in analyzing your data, understanding your situation, understanding the investments you've made, the goals that you're hoping to achieve, and actually just providing that really personalized advice, product recommendations, etc., based on it. And I think in conjunction with this, the other theme that we see a lot, which is still within the context of, personalized recommendations, is also around that personalized communication, because customers don't just want to get a personalized recommendation. They want to make sure the way in which it's communicated is also personalized to their situation, because as we know, how you frame a recommendation is so important, and actually making sure customers feel like this is something that has just been surfaced to them based on their situation, and not a mass market message that has gone out to all users of the platform, is also really important. So that's a long-winded way of saying, I think it's a good thing. I think there's a big opportunity within the kind of wealth and investment landscape for AI.
I agree. I hope it's used responsibly.
I think just a quick question is, I'd be interested in all your views, including Mike's and Benjamin's, but Nadine, do you not think there's an inherent risk if the AI gives the wrong advice?
Of course. And I think, and that's actually such a good point, and I should have mentioned it earlier, we speak a lot as well about the guidance to advice continuum. And so I think, to start with, whatever the AI does is going to fall into the kind of guidance bucket for now, because I guess to the point you're making, Chris, at what point can we agree as a society, as a regulator, as whatever, that AI can actually offer advice? Advice is regulated. So is AI going to be, or is the advice that AI is going to be providing going to be regulated, is, still a massive question mark. So I think it's a really good actual separation to make between advice versus guidance.
Yeah, regulators are going to have to move fast here, because people will start, because people are constantly experimenting and using ChatGPT and other tools, and the regulators are going to have to move very, very quickly, because they are going to find that people are going to be seeking advice from artificial intelligence, and that could have some very bad consequences for individuals. So the regulators need to move very quickly, otherwise they're going to find there's been quite a bit of consumer harm. Mike, I don't know if you wanted to jump in on that topic.
I was just gonna. This doesn't surprise me at all. I noticed, Chris, you didn't mention that it was before I was born either, so I won't take that personally. But yeah, it doesn't surprise me. Everyone's looking at this space. I'll be interested to see how these acquisitions play out. But I think your point is well made about really governance and that side of things. In terms of the technology, I think there's obviously advantages for use of the technology here, but how you use it and that automated decision making, and some of those things that come into play, and the rules that you put in your own organization about what actual decisions are we going to make off the back of some of these things is going to become probably more important than the actual technology itself, what it drives and what you actually rely on it for. And I think that's quite a big area for people to start looking at.
Mike, I want to throw one last sort of 30-second question to you, just as we wrap up on this subject. So if you take your Monzo hat off just for a moment, when a sort of digital bank's thinking about, a new tech like AI or whatever, what strikes me about this story is we've got two big, digital firms buying rather than building or partnering. Very quickly, how do digital banks in general go about that sort of buy, build, partner decision? Why do you think in these two cases, these firms have bought rather than building or partnering? Any quick reaction on that?
There's a lot of things that go into that conversation around build versus buy. I think obviously speed is the number one thing. If you can buy a capability that gets you to a certain point quicker than you could potentially build it, I think it really depends on what sort of percentage value return you're getting from buying something. In a lot of places where you kind of trade off build versus buy, you're thinking about, if I built this, maybe I could get 100% of what I want or 95% of what I want, but actually the time to build and the amount of effort that goes into that is potentially a lot longer, and may in the long run cost more money. Whereas if I buy it, I may get maybe sort of 60-70% of what I need. We can extend that we can make that, extended that value over a period of time, but we can get to that point very rapidly by acquiring. So I think a lot of it comes down to, what are you actually getting as part of that acquisition, and does it get you as far as you would expect for the price that you're paying? And trading that off against, do we have the capability to build this? How long would it take us to build this? And what percentage value would we get from it if we did that? So a lot of things go into that equation, I think.
Thank you. All right. Well, I think we'll all be watching Robinhood and Nubank to see what they do with those new acquisitions over the next 6+ months. Okay, so we're now going to have a quickly touch on one more news story that we don't have time to cover in full, and Chris has actually already mentioned it, which is that Wise has said that some of its customers have been affected by the Evolve Bank data breach. This was also reported in TechCrunch. It's a story that's moving very quickly, and we're planning on covering it in a bit more detail once the dust has settled a bit. But Wise, the FX platform, has announced that some of its customers' personal data may have been stolen due to the recent data breach at Evolve Bank and Trust. Wise worked with Evolve from 2020 to 2023, sharing personal information of US customers, including names, addresses, dates of birth, contact details, social security numbers, and for non-US customers, another identity document number. Wise is actively investigating the breach and contacting potentially affected customers directly, assuring that Wise's systems were not compromised and its customer accounts remain safe. The breach, which has been attributed to a ransomware attack by the Lockbit cybercrime gang, also affected other Evolve partners like Affirm, Earnin, Marqeta, Melio, and Mercury, which are similarly investigating the impact on their customers. This is sort of, as we were talking about earlier, this is precisely one of the huge challenges that as financial services companies share more data to enable new capabilities, it does open up ever more avenues for fraudsters. And Evolve Bank and Trust has, of course, unfortunately been in the news for all the wrong reasons a little bit too much more recently. So I think we'll come back to this story in subsequent podcasts. Okay, so and finally, we will move to something a little bit more lighthearted from the world of finance, which is that a Wells Fargo analyst ordered 75 Chipotle burrito bowls to test portion sizes, according to CNN. So there's been a viral trend on TikTok called the Chipotle phone method, which accused fast food outlet Chipotle of skimping on food portions, leading customers to film employees making their orders. Chipotle CEO Brian Niccol denied the claims, stating that portions have not gotten smaller and that customers can ask for more if needed. So Wells Fargo analyst Zachary Fadem and his team took matters into their own hands and conducted an investigation, ordering and weighing 75 burrito bowls across 8 Chipotle locations in New York City. He found significant variation in portion sizes, with some bowls weighing 33% more than others. Despite the portion size debate, Chipotle's sales grew 7% last quarter, outpacing rivals like McDonald's, indicating that the controversy hasn't hurt the company's performance. So is this an analyst using their research skills for good or evil? Is this a good use of time? What do we think of this story? Nadine, perhaps?
I personally think it's a great use of time. I think, all of us have busy lives, stressful jobs at times. So to be able to find some humor and lightheartedness in your day-to-day is pretty funny. I mean, Benjamin, you're obviously the research and strategy expert amongst us. But I mean, reading the data that you've just shared with everyone, 75 burrito bowls across 8 Chipotle locations. I mean, that seems like it could be statistically significant. I think it's a fair sample size. So I think, their methods are pretty sound. And
I want to know if they ate them all. Do you think they ate all 75?
I'm convinced. I'm sure they shared it with, the wider Wells Fargo team, and they had it in their cafeteria for that day. So, arguably everyone has benefited from this.
Is there 7% growth attributed to the 75 burrito bowls? And that's the question. I don't think not so much.
I think Chipotle's a bit bigger than that.
Apparently next month, the Wells Fargo team are going to analyse McDonald's burgers, and then it's going to go on from there.
Oh, maybe we should start our own one. Our next podcast, we could choose a British chain that we want to repeat this on.
What do we feel about people being filmed while at work to be posted on TikTok? And I mean, I realize we're sort of being filmed in the background because we have cameras on while we record the podcast. But is that a bit of an intrusion when your customers start filming you while you're doing your work?
I think so.
That's an interesting question, Benjamin, because we have a UK general election vote at the moment, and the rule is that you cannot film when you're in the polling station because you might catch someone else's vote in the background. So, there's a permissions thing there.
I am just going to say, just for all our listeners, who knew that the Green Party was going to get such a thumping majority?
I did appreciate the Sun's headline the other day, which was Starmageddon. Anyway, I shouldn't have said that because obviously I don't read the Sun. I don't read the Sun. Obviously, I'm a Times sort of guy, or Financial Times, that is.
I suppose that maybe the serious point that this analyst was trying to make is the risk of what's called shrinkflation, where there have been various companies, particularly sort of chocolate bar manufacturers and so on, that have been accused of making the product smaller than it used to be. Are we going to see our Monzo cards getting smaller? I mean, how serious is this sort of shrinkflation issue? Is this justified?
I mean, for me, it feels a little bit like fraud, if I'm honest. I think word on the street is that Maltesers bags got smaller as well. So I think, it's becoming a big problem.
It's such a frustration, isn't it, when you go to the grocery store? And for me, it's always with the bags of crisps, and I pick one up, and I'm like, I feel like this is only 25% full now. Like, why are you even bothering to waste such a large bag on such a small portion of food inside of it? So yeah, I think it's a concern. I think especially in the context of if they're not changing their pricing to reflect the lower amount of food being offered, then that's a massive concern, because no one wants to be paying the same price they were paying however many years ago for something that is now substantially smaller.
Yeah, it does sort of feel like fraud, doesn't it, when companies are reducing the portion size and yet the price stays the same, so you're getting less for your money. You'd rather see the price just go up than feel that you're being sort of tricked into paying the same for less. Well, that's a cheery note to end a podcast on. So we probably shouldn't do predictions for the UK general election result, which will be out after we've finished recording this podcast.
How about a prediction of who will win the Euros 2024 in Germany?
Okay.
Oh,
I'm going to say Spain, which is most unpatriotic.
I'm going to say Netherlands because I'm half Dutch and they had a great last match.
I'm going to say England because I am the eternal optimist.
And I'm going to go Germany because they always improve and it's the host nation.
Well, all four of us may well be wrong. So that wraps up this week's Fintech Insider News. Thank you so much to my guests today. Where can people find out a little bit more about you? Nadine?
Yeah, feel free to connect with me on LinkedIn. It's Nadine Timmer-Bodenstein.
Mike?
Yeah, same. LinkedIn. Look me up, Mike Bray. You'll see me at Monzo.
And Chris?
Almost everywhere, but particularly LinkedIn, X, formerly Twitter, and the Finanser.com blog, which I recommend you read every single day.
And as for me, Benjamin Ensor, you can find me on LinkedIn, or you can find out about the work that the team are doing at 11fs.com. So thank you all so much for listening. If you like what you've heard, please do follow our podcast. Let us know what you'd like to hear about in future shows. If you want to join the conversation, find us on social media, search for 11FS or Fintech Insider, or you can email us at podcasts@11fs.com. Thank you all so much, and goodbye.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak. So sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Size goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.